Welcome back to Trader Sage. What we have here is a naked chart on the 4-hour S&P 500 E-mini futures, the ES continuation chart or continuous chart, 4-hour chart. Let's see what we see here. And this is what I do. So initially you want to go to the weekly chart for the week, obviously. Go to the weekly chart prior to the week starting and see what we see here. So we have price running clearly above this high here. Clearly ran above this high here, creating a swing high, pull back below. So force breakout above this high. And we created a volume imbalance here. It's too dark. I'm just gonna put VI for weekly volume imbalance. Just make sure. Oh, I don't have to do that. You can press the control key and hold down the left button on the mouse and drag it. And click this, and then visibility on intervals, and I took current interval and below to make sure that it's going to show on the weekly and every other time frame below that. Okay, and what else do we have? We have a volume imbalance here as well, and we have a fair value gap, bullish fair value gap. Okay, so we can either highlight like this or highlight the whole thing. So let's highlight the whole thing, and you're gonna make that like a light green, and put fair value gap plus to fair value gap and the ampersand. No, let me put the plus sign. Plus volume imbalance, and it's weekly. That's what we have. That's before, prior to the creation of this candle. And obviously the weekly candle for this coming week is going to open up somewhere, hopefully inside of this range, inside this previous week's range. So you're going to look and see if it's going to hold here. Is it going to pull back? Is it going to continue higher? Right, because this is bullish. It did show weakness the previous week, still push higher and close bullish. And you can go a little step further in terms of what percentage of the candle is price currently. So closing the upper 30, upper quadrant between 30 and 20. So close to the upper 20% of the entire candle's range. So this clearly is bullish sentiment. And if this is going to create a swing low, then we know, or we have some idea that price won't take this low out. It's going to, because a swing low by definition, it's a low with a higher low on both sides of it. So if that happens, it doesn't have to happen. They can eat this whole wick. So you can break this fair value gap and this volume imbalance into quarters, or you can break this wick into quarters. It's essentially the same. Even though this dropped a little bit lower. All right, and another thing we want to, in terms of this week here, we have this premium PD array here, volume imbalance again. But this was the range when price opened here. This was the range price was in. Ran that low, ran into this volume imbalance, and then pull back above the fair value gap. So this coming week, we want to, ideally, if we are bullish, ideally we want price to hold the upper quarter, and at the very least hold a consequent encroachment of the midway point of this fair value gap if we're bullish. But clearly you can see anything goes sometimes, right? It's not a hard and fast rule. And that's unnecessary, but you can draw this low out as well, as that low was ran. And all right, I'm going straight to the 4 hour because I don't need to go to the daily. And you hold the shift key and you get to, like, hold the shift key and it snaps back, maintain a straight line. Okay, so you have a couple of things here. Okay, and just cleaning up here. All right. What do we have here? 4 hour chart. All right. So clearly from the weekly chart, we have price running above here, not being able to hold, right? It didn't technically run this high here. It kind of irregulars equal highs. So that's a target in the future. But look where price is, right? Like, so we got a false breakout above here. This is the displacement. We have an imbalance here, imbalance here. So we have a volume imbalance here. So we have a lot of reasons for. We have a bullish fair value gap here that was violated here. So we do have a balanced price range here. And why is this even considered? It's considered because it was fake. It was fake support here. Pull back up, violated with force, right? So we have a bull bar, fair value gap, bear bar with significant displacement, retracement. You have a lot of inefficiencies here. So a lot of inefficiencies in this range here, in this consolidation, which you can argue that is efficient at this point, right? So you got bullish, bearish, bullish, bearish, bullish, bearish. So yeah, so everything is, again, like it's like that paint roller, right? So you went this way, you went that way, you went this way, that way, came back up, huge imbalance, and there you go. Let's see what this low is. Precision is not, I don't care about precision, but it's always nice to when you see it. So this is a tick above this candle's low. A tick above this candle's low. Whatever. All right. Main point is false breakout. This is your market structure shift here. Really is here. I'm choosing this one over that one because of this imbalance here. So it ran this low here. So this candle would be my market structure shift. How much time you get? All right, try to wrap this up in the next 6 minutes or so. All right, so we have a market structure shift. Market structure shift is, all right, this was bullish this whole time. Bullish, bullish, bullish order flow. False breakout, consolidation, displacement, this drop here, leaving these inefficiencies after we have this consolidation zone, displacement, retrace into this bullish fair value gap and this bearish fair value gap, balanced price range. We can draw that out if you like. That's the That's the bullish one I'm not gonna do. And it's just mainly the part where it like overlaps. So, all right, so displacement, retracement. What does that mean for me? That means optimal trade entry. And let's do super detail, right? Like, all right, so we have the 78.6 entry here. It's about approximately a 20-point spread, 19, 20-point spread here. Something like that. If I'm doing that because if you don't want to miss the move, you get in at 61.8. But your stop is still stay here. And you can do like ICT and don't use the wicks. For me, I'll leave it like this. But if it's this substantial wick like this one here, then I'll use so I anchored it from this low or this high to this low here. But because of this wick here, I'll use the lowest body and I'm eyeballing it. Lowest body is on this candle here. And I'll leave that because this is the highest high, body high is it's really close proximity to this swing high. So 71.6. This high here is 76.1150. So it's just shy of 78.6 as an entry. What's this opening price? 75.39. 75. All right, so we're about almost a point away. Am I speaking the truth? Yeah, 3 ticks. Anyway, still in the zone, optimal trade entry zone, which is here to here. And you can do that. You can do this and then just take this off the chart if you wanted to. So when price comes in this zone here, you can be ready. What type of inefficiencies in this zone here? You can just rely on this or balance price range, short. All right, so that's your entry. And this would be on the 4th. And this ends on, you can say the 5th. And because of the 4-hour chart, then we're looking for trades to last 1 to 2 days in general. So this pullback entry, again, the low risk sell is on Thursday, the 4th, and concludes on Friday at on the 2 o'clock candle. And then we have a pullback into that weekly volume imbalance that we highlighted earlier. If you wanted to locate, hold on, we can keep these in play. We can technically higher time frame, drawn liquidity. We can also fade those into the background, so to speak, and look for specific setups on the 4-hour chart. Like with that look for PD arrays on this 4-hour chart in close proximity to these weekly PD arrays. And when I mean premium and discount arrays, or these, in my case, I just use inefficiencies, volume imbalance, fair value gaps. All right, so this here about 3 standard deviations. Let's look and see what negative 3.5. It's all jumbled up because this is a sandbox. All right, so it didn't quite reach the negative 3.5, but definitely reached the 3 standard deviations. Good money, right? But look, you want to consider, there's different things to consider, right? So you have this short straight down into a bullish weekly fair value gap. That's it. Khalas. Get out. right? And this Thursday, Friday is the end of the week. Then you got the retracement up until Tuesday morning, 6 o'clock on the 6 o'clock candle. And this is the best way for me to say, okay, in terms of projections, this is 256 points. Go back to this candle, 252 points, and it took 1 day to do it, right? Like we discussed, entry on Thursday, 2 p.m., exiting on Friday on the 2 p.m. candle. And we can do, so we're looking at, and I'm telling you about projection, right? So be looking for this same movement in close proximity to be completed again, right? So this was 252.50 points, and we're looking for on the retracement a duplication of that. So I'm eyeballing it, but it's this high, and this is 252.50. So we got a measure move, right? A, B, C, D pattern. A, B, C, D. And again, we're still inside this bullish environment here. I did bring up something along the lines of look for levels, look for PD arrays on this time frame, and kind of push these weekly ones to the background if you're able to do that. But this is still this optimal trade entry playbook is still in play, right? This is still in play. Reach a weekly objective. The next week, pull back to a weekly target, then pull down to another weekly target. And this week here, we didn't quite reach back into here. So this coming week, I would probably anticipate price at least tapping into here, because this is a higher time frame weekly level. It could pull back. Let's see here. So we got a run on stops here, and here running above this high here. I would consider that to be a market structure shift. Then you're looking for a pullback. Got a tiny little fair value gap here. Tiny little fair value gap right here. And then we want to see, we want to see so the lowest body. And let's do the high here. So looking for an optimal trend entry pullback to here, or again, very limit would be here. Stop loss 72.59.25 or here. And so this is the purge, this is the revert, and the pullback. The pullback would be the revert and acceptance. 1, 2, 3, potentially taking out these relatively equal highs here, or original consolidation. And that would be a completion of a market maker buy model. This is the sell side of the curve. This is the buy side of the curve. But we also have the 3 drives pattern, one reversal pattern, 1, 2, 3 lows into this weekly inefficiency. 1, 2, 3. So 3 lower lows, then a higher low. Push. All right. Oh boy. All right. I exceeded my time, but I need to still mention. All right. So we have here, we have this balanced price range, or this bearish fair value gap for our entry. And then we have this into a weekly inefficiency. So now we want to consider this pullback. How far back could it have went? And we have this inefficiency. So let's see. We wanted the model calls for price to go from discount to premium. In this case, it pull back above 50% of the range. So this fair value gap is in play. And again, we are ignoring, try not to say erase it. Let's just erase it. I kind of I kind of already highlighted the model or the situation on the 4-hour chart to consider to consider the exit, right? These 3 drives below, right? And it yeah, so it's all right. So I just highlighted, right? Above 50% makes it a premium back into discount. So it's been some time since I mentioned so we got internal range above 50%. So that's a premium array, bearish. We have this consolidation here. And this bearish fair value gap here. Price traded into it. Short. So we got internal range, external range. These relative equal lows here. External range. So external range, then we got internal range again. External range is to take the running of these relative equal lows. You can do other stuff and look for imbalances over here if you wanted to, because all of this prevented price from going lower before, right? That's how I see it. You can see however you want. You can use this even, but I can see that price traded down into here and use it as support. So that's what I would do, or that's what I would consider. So we have that as a support on a 4-hour, right? And this is something like futuristic that we just deduced from the chart. So we have this here, bearish fair value gap. We have one here as well, but whatever. So we need price to hold above here and here. So yeah, so these are the 4-hour imbalances that supports price lower. And we can do the 3 drives pattern, 1, 2, 3 drives climax pattern into this inefficiency, or you could just ignore this inefficiency if you didn't see it. Who cares, right? It's up to you. So we got, that's essentially it. I don't want to be like a dead horse. Like I didn't use any and again we had that measured move as well to support these lower prices. But this wasn't an optimal trade entry. This was mainly to highlight going from a discount to premium, or in this case discount back into a premium above 50%. Same thing here. Yeah, let me not drag it out. All right, so you do what you do, and then if you wanted to, you can say, okay, this is all price action orientated, and you can say, okay, what can I deduce from an indicator that I'm comfortable with in terms of like back testing, right? This is the 3ATR channel, 20 EMA 3ATR channel. Pull back to the EMA short outside of the 3ATR, so this means that it's, you know, potentially oversold. Pull back to close to the EMA, drops again, takes out the low, pullbacks above the 20 EMA. So we want to do 2 things. We want to make sure price holds above here and holds above the 20 EMA. That's it. That is all I have. We also have a reclaim of this level as well. So we have a drop, false breakout, pullback, short, or false breakout again, reclaim, so pullback. So we also want to see price hold above this level as well. That's all I got. Thank you for listening. Deuces.